What's up, everyone? Today I just want to talk about why bother investing in crypto at all. I had this conversation. I had this conversation multiple times with different backgrounds of folks. I've spoken to my friend who works in a VC firm. He used to be in BlackRock, and then now he's moved to doing it on a private basis with his family. I've spoken to people who are in the traditional equity markets like brokers, ex-bankers, bankers, and even traders, stock traders, and all of them probably say the same thing. Say hi if you're on the live stream. It'll be great to at least see you guys. Anyway, so when I was thinking about this question, right, I always had the same question. Why are you even in, what's up, Benz? Why are you even in crypto? Why bother investing in crypto? They all roughly know, especially those who trade, right? They all know that it is lucrative to trade it, but they're not very receptive and consider it. They don't even consider it as an asset class. It's to them it doesn't make sense. What's up, Bob? What's up, Fernando? Nice to see you guys. At one point I actually started to agree with them because, like I said, I came from the traditional markets myself, right? And if I came from the traditional markets, I always wanted to have this belief that if I was to buy cryptocurrencies, right, there was a purpose. There's going to be something worth holding in the long run. Okay, that's my personal belief because I've been in the space for 3 years and I've seen so much development, but I've also seen so much, so much that has happened that doesn't create a very good impression of the space. For example, at the time, think about it. Okay, if you were someone who was involved in crypto in 2017, okay, and I think a good part of us were in since 2017, when you wanted to buy cryptocurrencies, you are always concerned about whether or not the exchange is reputable, whether the exchange can even be trusted. In the traditional stock market, right, you don't even think about all these kind of things. You know for a fact that the broker that you're going to be using more or less will be around. But there are certain occasions where the broker actually had to close down. I can't remember during the bear market, right, of 2008, the subprime crisis, right, there was a few brokers that actually went bust. And I'm always very curious about what kind of happens to those what happens to those stocks, right? Because brokers, at the end of the day, it's all in paper. So whether or not there's a custodial service that holds your stocks, there always has to be, because if you buy the stock, right, they will have to hold it on your behalf. That's how it works. So it's the same thing like crypto. Crypto was having this whole issue of stocks, of having your coins disappear, or they would shut down, or there was some kind of exit scam, people losing money, they would claim they get hacked. Okay, so that's one issue. Okay, and gradually the next issue was, how do you actually hold the coins? So there's two sides of this story, where you want to hold it yourself, and you want to hold it yourself, or you would trust the exchange to hold it on your behalf. So these are the things that you have to ask yourself, especially as a crypto user, as a crypto investor, right? You always have this worry that, oh man, I can't even trust the exchange. I want to put my coins with a cold wallet. And what you would do is you would transfer it to a cold wallet, and even the cold wallet sometimes has issues. So what do I mean? Let's say if you were to use so Mu, I would say Mu is not entirely a cold wallet. It's like a desktop wallet, or I would say it's a hardware wallet, or you can say that it's a software wallet, right? And even that had issues. Okay, everything was just so beta. Even till now, right, if you think about it, if you use Ledger, Trezor, KeepKey, or whatever that's out there at the moment, okay, to a certain extent, you feel safer, but it's inconvenient. Okay, so that's another issue. When you want to have a high level of security, it becomes inconvenient. when you want to trade or you want to let go of your cryptocurrencies, because markets are very volatile. Right now, the market cap is so small, the market movement, it can be very erratic. So what happens is that you are having your cryptos on your cold wallet and you suddenly see a 20-30% move, okay? And it actually makes your portfolio a little bit too heavy on that particular asset class. So what happened? You usually would have to do a cash out or a rebalance. That is just the norm because you don't want to have one particular investment outweigh the rest of your portfolio, because if you already created that portfolio, you say that, okay, I want to have a certain exposure to this coin, I want to have a certain exposure to that coin. That's okay, but eventually if that coin starts to pop, you want to rebalance that so that you bring down the weightage, and then you look at diversifying to say another asset class or build into your BTC stack or your Ethereum stack, whatever is your long-term hodl play, right? And of course, naturally, that coin could be the long-term hodl play. Don't get me wrong. There are certain coins that have very strong fundamentals and they have been generating revenue. You can stay invested in that particular coin, or even when the valuation or when the cryptocurrency goes up, you can add more fuel to the fire, as they say. You don't have to necessarily cash out. So it depends on your angle. So I had an episode about focused investing and diversified investing. So you probably want to go and check it out. That episode will clarify what I'm talking about. Because there are folks who enjoy having multiple cryptocurrencies. We're talking about 10 and above, right? But I prefer focused investing because I am able to keep track of my portfolio. Simple as that. Because there are other things that in a particular person's life that they have to look at, maybe their job, their family, and investing can be a multitude of asset classes. It could be you're someone who is doing property and you need to find renters every time when your lease is up, so there's that headache. Then there are times when you have a stock portfolio going on. You want to keep track of the dividends that are coming in, what's the growth of that particular stock portfolio, and then now you have your little crypto portfolio. But so here's back to the topic. Okay, so that was a little bit of a digress just to get you all a little bit up to speed. So back to the question, why bother with crypto as an asset class? The next thing that I want to talk about is liquidity. Why this space right now cannot be taken very seriously is for the fact that even if you see the market cap, okay, even if you see the market cap looking pretty decent, the daily volume for most cryptocurrencies, okay, let's not talk about top 10. Let's talk about anything below, okay, doesn't have much volume. Meaning to say that even if you wanted to put in $10,000 in one order, you could not. So think about it this way. You might be thinking, Ryan, I don't even have $10,000. Isn't this space still great for that? Well, that's true. But because of that, you are not attracting the larger players, which I feel is not that good of an idea. Think about it this way. Right now, the current stock market, right? Majority of the people who are in the stock market at the moment, they are all mostly hedge funds, institutions, okay, hedge funds, institutions, VCs, private equity, okay, because the market cap, the market cap is large. We're talking about in the trillions. You have pension funds as well, okay, all they are able to put their money there. They can park it in the stock market, and they want to get in, they want to get out. It's easy. If they were to come into the crypto space, okay, they only can go into Bitcoin or maybe even Ethereum, or maybe not even Ethereum, because sometimes maybe the volume isn't there at all. So this is the problem. In a way, that's why you may not want to get those guys in yet, because the moment they are in, right, everyone is going to just weigh to their advantage. Do you see what ICE is doing? That's why when you think about it, okay, great, big money, institutions, they're coming in to legitimize the space. But what they're going to do is push us little guys out, okay? And when they push us little guys out, end up, we may have a nice ROI on our portfolio, but eventually, all valuations will become too expensive and it doesn't make sense for the smaller players, and we get pushed out from the main board to the shitty listings. You get what I mean? Think about it. Look at, if you were someone who was genuinely interested about trading, investing, you would see a lot of stock gurus, stock teachers start talking about stocks, right? And what happens is that they are not trading the top, the top of the top, the ones that are top 50, top 100. They're basically trading the ones that have the most volume and volatility. That's how you make money as a trader. You don't care whether Apple is doing well in their next quarterly earnings or their latest fundamental, like say for example, if what's his name? Suddenly I forgot. Wait, who's Tim Cook? If Tim Cook announces the latest product, you don't care. You want to have enough volatility and volume, and you can make money on the trade. That's all that matters. You don't care about that because these guys are not teaching you to hold stocks. That's why no one's talking about holding stocks at the moment. Only old people kind of talk about it. But right now, you're seeing the whole shift. You're seeing a younger generation of the hodl play. And of course, naturally, hodl was such a bad word because in 2018, early 2018, everything tanked. No one wanted the hodl. And that kind of reiterated like, wow, I should never stay faithful to crypto. But let me tell you the truth. If you really want to have the 100x, 200x gains, trading doesn't work. I'm not saying that trading as a skill doesn't work. You learn how to trade because because you know how to trade, as an investor and you knowing the skill set of moving your money in and out, right? You are able to capitalize when there are parabolic movements. As an investor only who understands fundamentals but doesn't bother to even know what the sell button is, and if you think that, okay, by hodling and when there's a 30% movement in a single day, because crypto does that, okay, crypto does that, 30, 40, 50%, that was what happened in the past 2 weeks. And as an investor, I would cash out. That's what I did. You see, because when the market started to move, unfortunately, my weightage, back to my earlier point, my weightage of that particular cryptocurrency actually moved up and moved my whole portfolio up. So right now, I'm overweight on one asset class. So the risk becomes very high. Because I know how to trade, right, as well, or I have the skill set to know how to trade, I decided to cash out and move it into either USD Tether or whatever stable coin of my choice. From there, I will reassess the situation because eventually, guys, the hype will die down, and then after that the price will start normalizing and keep up with whatever fundamental. Because so you have this I'm sorry, I don't have the usual drawing kit that I would use, but hear me out. So you have your price, okay, that will move depending on what kind of volume or excitement or news, okay. Then you have the fundamentals. You have this fundamental curve. Okay, so take it as this. Price, right, can be either above your fundamental or below your fundamental. Most of the time, right, your price is above, right? That's where people always overvalue shit, okay, a lot of hype, and then people tend to be buying it up. What happens is that there are some cryptocurrencies that are actually below the fundamental. That's where you want to find, because the moment people start realizing and starting to understand this, and if a company's fundamental growth, right, is still strong, it's still growing, you want to catch it when no one knows about it. That's what you're supposed to do. Right now, I know there are cryptocurrencies that are like that. Many are like that, okay? Too many. You want to find these or the ones that are closest to the fundamental line. Because the moment when the space starts understanding and recognizing these companies, that's when the price will start to move up. And when that happens, you need to know how to rebalance your portfolio. That's what you need to do. Okay? I am not sure why I can't see the comment. Okay, so Shiruba, your question, what is your opinion on CBOE and BUCK working together to produce physical ETF? Example, if SEC only approve BUCK, only approve BUCK, then it would be a monopoly. There needs to be competition. Yes, I completely agree, Shiruba. Okay, there's nothing much that we can do. Okay, there's nothing much that we can do. The only thing is you must understand that the space, okay, eventually will have a few sides. One, you have the crypto exchanges that will function on their own. okay, they will play ball depending on which jurisdiction and which country they're going to be in. Then of course you have the BUC, you have the ETF, ICE, okay, those are the old boys. Okay, the old boys want to come in and play, but they want to create their own data feed. They want to create their own data feeds, right? Because it's important. They will want to create their own crypto exchange. Okay, that's where they're going to start pulling the data. This is the part where it gets very, very interesting. It has never happened before. Think about it this way. Right now, right, if you are someone who is, if you're someone who is interested in crypto, only in the crypto space do the exchanges, right, practically are the brokers as well. Do you realize? If you are someone who is trading, your broker is not the exchange, you know. The brokers are linking their API to the NASDAQ. It's very different. So I cannot answer that question on how it will play out. Because right now, you're going to have a choice. The traditional folks who are very familiar will prefer regulated, making sure that you have the custodial, making sure that you have the framework. Okay, so this is for everyone. This is for everyone. Then what happens is that you're going to have these folks moving towards there. Then you're going to have the folks that will still stay with the existing crypto exchanges, say Binance, Huobi, or OKX or whatever, because the mechanisms are more dynamic. Do you notice that you can do a lot of things within those exchanges? Do you realize you want to do margin trading? You can do. You want to do. You want to have an extensive coin book, okay, or Binance has Binance Labs. You want to read about each different cryptocurrency. There's all the descriptions, and the exchanges have various requirements where those projects have to do reporting. If they don't do reporting, there are certain criteria that could get them delisted. You know, all these things. So there is a whole spectrum that is completely new in those exchanges compared to if you look at the traditional exchanges. It's very different, guys. So you have to identify. Now, let me see. What's up, decentralized dad? I'm here. Okay, we have to invest. So Ganesh is saying, we have to invest in crypto who are fundamentally strong and now trading low. But how to find such crypto? Okay, so that's a good question. I think it all boils down to your experience. Okay, your experience and the knowledge that you have. Okay, depending on where you're coming from. You are someone who maybe is interested in a certain cryptocurrency, or you're even coming from a specific industry. You know that it's lacking it's lacking, but is the application of blockchain really relevant or not? You must ask yourself this question, because sometimes, right, everyone is using the fluff word of blockchain and the fluff word of everything else, or within the crypto space, or distributed ledger technology. It doesn't make sense anymore. Why bother about just one protocol on top of your infrastructure? If your infrastructure works fine, why give it a shit? That's why, in a way, right, we moved away from smart contract protocols for now. But what I'm starting to see start to evolve and become very, very solid are the exchanges. Now, back to the topic. Why bother? Why bother even holding the crypto? Why can't we just buy the equity? Let's just be very honest. How many people can even have the chance to buy private equity in Binance? How many people can call up CZ and say, hey man, I want to come in and put in a few million. I want to put in a few million and get 1% of the company. The question is, CZ will say, who the fuck are you? Seriously, who the fuck are you? Like, you are not going to get that chance. If you're not going to be a strategic player, a strategic investor that they can get their business growing, right, you're not going to get in. Simple as that. Okay? That is the reality. So we are left with the tokens, unfortunately. But the tokens are very, very unique. They have revenue sharing. And when there's revenue sharing, there tends to be a certain level of coin burn. Okay? There's more incentive to hold it. Where if you were to buy a stock these days, right, sure, you have the voting rights. But let me share with you, common equity, right, is the lowest of the food chain. Senior debt, okay, senior debt meaning that you are a bondholder, preferred stock, okay. Then I think there's, so bondholder, preferred stock, there's somewhere along the layers in the private equity side is the convertible notes. okay, that allows you to convert to equity when it hits a certain valuation. Now that's private equity, but let's just go on the offerings. So you have your senior debt, which is your senior debt, junior debt. So you have your so we call it the bonds, okay, then followed by the preferred stocks, and then followed by the common equity. So common equity is like the lowest of the low. Now tokens are actually unfortunately even below that because you're not even getting anything. Okay, so common stockholders, right, apparently still have voting rights. But guys, if you own one Apple stock, do you think you have much of a say in AGM? Do you think when you go to, even if you were invited to the Apple AGM, do you think they'll listen to you when they know that you only have one stock? They won't. So to me, all the questions that I've been getting, right? To me, I'm like thinking, who cares, man? If I was owning some Facebook shares and I put it in my portfolio, you think Mark Zuckerberg gives a shit? He wouldn't anyway. So what if you have voting rights? You see, people like to have a voice. People like to have an opinion or be able to share that opinion. But let's just be very realistic. Board of directors have the most say. Okay, board of directors have the power to even kick away the CEO. Okay, because why is that so? They were the ones that pumped in the money to bring up the valuation of the company. So if they wanted to vote, well, and we all know that Steve Jobs got kicked out of Apple, right, at the time, and then after that he created Pixar, right? You see, so all these things, right, only matter at the highest level. Why do you bother about whether you have voting rights or whatever when you hold a crypto? And even if the crypto it's not equity, it's not recognized as equity, I think it really doesn't matter because you're already so committed already. This whole space is starting to really pick up. You don't want to care about the small shit. You want to care about the fact that you can make money or not. Whether you're making life-changing income through crypto or you believe that investing in crypto will make you life-changing income. That's all. You only need to care about that. Because when I buy, okay, let's say for example, let me give you another example. Let's say you were in Alibaba. Can you buy Alibaba at the early stage? You had to be with him. You had to be with Jack and slog it out like a dog with Jack before he became the titan that he is today. Okay? The moment that it reached onto the New York Stock Exchange, right? The valuation was already in the billions already. Or if I'm not wrong, into a few hundreds of millions. That was the life-changing income for the people who had the private equity at that time. Could you buy in then? Maybe there were a few rounds. I need to go and read the autobiography of Alibaba. But you could theoretically you could. So that's the point that I'm trying to state. That is the point I'm trying to state. So, okay, so question from Bob, or maybe a comment from Bob. Celsius is nowhere near radar at the moment. I intend to use their wallet heavily. It's like getting paid dividends just for keeping your money in Celsius wallet. Now, okay, guys, let's differentiate something, okay? Please don't keep using the word dividend. Please don't keep using the word dividend. It is a distribution. Right now, if a company, you want to call it, in the crypto space, we keep calling project. A company needs to have profit in order to give you a dividend. Stop saying that it's a dividend. It is a distribution. I know it's longer, but use the right term. A dividend is only given out when there is a profit. Right now, if your particular company or project that you're investing in is not making any revenue and they are not making any profit because there's still so much in terms of operational costs and development to pay for, don't say it's a dividend. Say it's a distribution. I'm getting a distribution of tokens. Okay, just use the right term. Okay, so if you're saying that it's actually dividends, if you're actually saying it's dividends, may I ask another question? Where's the income statement to prove that they're making money? If you can show me that Celsius Network is showing that they are declaring a profit at the end of the day, and this profit is shared amongst all the token holders, I will take it as a yes. But Celsius will also have investors who came in on the private equity round. The profit and dividend should go to them if there is any. because token holders are only given a distribution. So if it's not in cash, it's considered tokens, it doesn't work. You have to differentiate that. There's no such thing. Income statement, and the income statement has to be audited by the Big Four. All right? Or not necessarily the Big Four, you can look for someone else, but as long as it's audited by a third party. If it's unaudited and it's audited internally, you still need to give it 50%, because those numbers can be so-called falsified. And if it's only a portion, you want to have a proper income statement. So go and look at any listed stock exchange, the income statement, or we call it the financial statement. Go and take a look at how that looks like, and then you compare. It should look the same. If it doesn't look the same, okay, if it doesn't look the same, it doesn't count. Okay, I'm sorry to say this, but that is the truth. Okay, so guys, anyway, that is all that I have for today's episode. Like I said, this is non-financial advice. I only want to give you all a perspective. I only want to share my perspective about the space, and hopefully you learn something today. Always remember that this space is continuously growing. There are always best practices, and at the same time there are also practices that and there are also standards that you want to maintain, especially if you're looking at an investment portfolio or looking at a trading stack, okay, that you want to build up. Don't forget that at the end of the day, guys, this is a highly volatile space, and you need to be well informed about what you decide to do. Alright guys, so take care. We'll see you in the next video. Don't forget to give it a thumbs up if you felt that it was of value. If you felt that it wasn't of value, give it a thumbs